Hey guys, how are you? This is Javi with Javier Hurtado Realty. Today we have a good friend of mine here. His name is Jordan. He is the Director of Wellness over at Sapers and Wallack. Jordan.
Hello, hi everybody. Happy to be here.
Yeah, guys. We actually met, funny story. We met at a Sunday gaming place we go to. We actually play Super Smash Brothers every Sunday at Versus, and this guy was just like so on top of his game, and he's actually very good Super Smash Brothers player.
I
So I
don't
had
know
to
about
show
that one.
him.
I have some room for improvement. I don't know if this is true for you, Javi, but when I was growing up, I used to be like the hometown hero, kick everybody's butt in your circle of friends to the point where nobody wants to play with you anymore. And then I showed up to our local, Smash tourney, and then I got humbled really quick.
That's how I felt too. I was like, with all my friends, I was like, oh, I'm so good. I went to a tournament, I got squashed.
Yeah.
But I still keep going because I'm getting better and better. And I mean that applies to everything if you think about it, because you have to go back and forth, and you get better every single time you get with really good players.
It's true. It's true. It's why part of the reason why I keep showing up.
Yeah, it's so fun. Plus, the people there are very nice. So if you viewers are in Boston every Sunday versus 7 o'clock, you guys can show up. There's a great group of people. Everybody's super nice, and you can go and network and just play video games with people. It's very, very entertaining.
And a personal plug, if you play Tekken, show up on
Oh my
Thursdays for
God.
fight night.
Fight night. This guy in Tekken though, this guy is a problem.
That I will proudly hold my medal up high. I am pretty
Yeah,
good at Tekken.
yeah, you are very good. Well, anyways, let's get back to this video, guys. I know you guys want to hear us back and forth, but we're here because we want to talk to Jordan about financial wellness. So I guess my first question is, how do you see financial literacy passed on nowadays?
Yeah, so I mean, I really when we look at financial literacy and financial wellness, they're kind of two sides of the same coin. And what I mean by that is financial wellness is really just a byproduct. It's not a product, it's not a service, it's a byproduct of pursuing your financial literacy. And so therefore, the question there is really how does financial wellness work in most people's lives? And typically the way that, financial wellness works, how we attain financial wellness and really how we pursue our financial literacy is through questions to friends and family. The kind of thought experiment I like to ask, and I'll ask you this, Javi, is
Mhm.
have you ever had a moment where you're either doing your taxes or you're trying to maybe get a mortgage, although you're very good at that, but certainly you had to teach yourself at some point and you had to learn from somewhere.
Yeah.
But have you ever like been in one of those processes and you just thought to yourself, why did I never learn this in school?
Yeah, all the time. I mean, honestly, there's a lot of things that are, as an adult, I'm like, why didn't I learn this in school? A lot of things, and financial literacy is like the main one that I'm always like, I should have learned this in school. I should have learned this in school over and over
For It's like, hey, I don't know how to balance a checkbook, but at least I know the Pythagorean theorem.
again. Brilliant, right?
Yeah, it's totally worth my time.
Yeah.
Um, so that's kind of the issue is that financial literacy is not taught in a classroom setting. It's all within the home. And so basically what we see is that financial literacy is passed within the family. And the reason that might not be the best thing is because just as financial literacy is passed down within the family, so too is financial illiteracy.
Mm.
So and I think we can all think of something that maybe our parents told us that they, swore was true. And then many years later, we find out, yeah, maybe it wasn't the most accurate depiction of something.
Yeah.
Santa Claus definitely being the prime suspect.
That was a
But
huge letdown. That one was a huge
huge
letdown. It was
letdown,
really
bro.
hard.
I'm still
Really
upset.
hard.
Um, but but that's kind of the reality that we all have to face is that we have to take what we learn from friends and family with a grain of salt, and there's no formal outlet for education when it comes to financial literacy. So the means at which people receive accurate, time-tested financial literacy in the pursuit of their financial wellness typically is hidden behind a paywall, right? Because you either have to pay for a book, pay for a class, or maybe pay to work with a financial professional. And that's fine and good, right? Educators and
Yeah.
financial professionals deserve to be paid for their labor just like anybody else. But that leads into what I find is what I call the financial literacy paradox, where the exact people who desperately need this information are the exact people who could not pay, they can't afford to pay to receive it.
Mm.
So there's no bridge that bridges that gap between the people who need it and the information that's readily accessible to them. So that's where I see people getting their financial literacy, but it's certainly a big problem. And that's where I spend a lot of my time focusing, working with financial wellness on kind of like the employer benefit side to encourage employers to provide financial literacy as basically an employee benefit.
Mhm.
So now the cost is covered, right? So the bridge has been made so we can end the paradox together. And you'd be surprised at just how great of an investment that is when you're talking about, employee benefits. It's always an investment in your people. Investing in the financial literacy of your workforce has so many cascading benefits outside of just their own ability to, pursue their financial goals.
That's brilliant. I mean, the fact that an employer will pay for all that stuff and to be sure that their employees are taken care of is like huge. It's huge.
It's
And
and I'm happy to see that more and more employers are kind of hopping on this trend. Because really we need that kind of third party. And I don't know about you, but I don't necessarily trust the government to provide an adequate social good for everyone. As much as they like to say that they do, I've yet to see anything work out flawlessly.
I
So
I will say this. I think it's since we're going into tax season and all that stuff, it is very silly of the government just be like, "Hey, we want you to pay us your portion of taxes." Okay. Well, how much do I owe you? Oh, you have to figure that out. Okay. But if you don't give me the right amount, I'm gonna send you to jail.
right.
That's like,
Like, but don't you have all the answers? It's like,
what?
yeah, of course, but you had to figure it out. It's like the
Exactly.
only occasion where like a math class made sense. It's like the government is the ultimate math teacher.
Mhm. Ultimate math teacher. And when you fail there, you're penalized
Oh yeah.
heavily.
They're going to detention for a long time.
Well, since we're on this topic and I want to jump into the next one, I do want to ask you, what do you think is the first step to achieve your financial goals?
Yeah, absolutely. So,
Yeah.
um, you'd be surprised, and I think many people listening would not think of this as their first step. And
Mhm.
what I'll share is what I commonly see is the first step that people take within trying to accomplish a financial goal, and that's through investing.
Okay.
And I'm sure that probably sounds very counterintuitive. Why would I not focus on investing? Isn't investing basically what a financial goal is that you're
Mhm.
saving to grow your wealth over time? And yes, that is true. But when you focus first on investing, then you're typically going to misrepresent your goal and your timeline. What I mean by that is if you're kind of aimlessly just like, okay, you know what? I have an extra $1,000 every single month or something like that. I'll just toss whatever's left over after I pay my credit cards and pay all my bills. I'll just put that into my investment account. And I can use that investment account to buy a house, save for the kids' college, save for retirement, whatever the goal actually is at the
Yeah.
end of the day. But unless you actually know the exact timeline of when you're going to need to withdraw that money, you're probably and most likely going to be investing in something that is actually detrimental to your overall wealth picture. Because
Well,
whenever we see a decline in the stock market, whether it's the 2008 recession, the 2020 pandemic, 2001 dot-com bubble, what always inevitably happens is that there is a large collection of people who are depending on the performance of the stock market for goals that are within less than a month. And you would, as we're talking about, you might see how recognizably silly that is.
Mm.
Of if I'm depending on something that I know is volatile, I know it can go up and down on a day-to-day basis. Why would you ever place your money that you need next month in something that could cause you to lose money? We're
Mm.
talking about saving for, a home purchase, but imagine if you're trying to pay off your credit card bill. Well, if you lose money that was going to go towards paying down that credit card, that means one, you're going to have to delay that goal. You're not going to have enough money to pay for it until you get maybe another paycheck, right? And you use your cash flow, the income coming in, to
Yeah.
beef that back up, whatever you lost. But then on top of that, because you're delaying your financial goal with this credit card, well, now you're accruing interest on that debt that's left over. So it would be silly to say, oh, I'm going to put my rent payment into the stock market and see what happens, right?
Yeah.
However, the real issue is that when people think about accomplishing their financial goals, they focus a little bit too much on the investing side. And what ultimately happens is that you end up having to budget your goals. The end destination is always making a sacrifice because you didn't really have concrete goals. So, what I encourage folks to do is to basically flip that timeline on its head. So, instead of starting first with investing and having the end destination be budgeting and making sacrifices, I would encourage folks to start first with making sacrifices, creating a budget, having those day-to-day transactions be budgeted and sacrificed in the pursuit of your financial goals, so that then the end destination is investing. Because
Gotcha.
the real key here, and I know your question was where to start first, so budgeting is
Yeah.
the answer. But the
Okay.
reason why that's the case and why I think that way is because in order to know what to invest in, you first need to know what your goals are. You need a concrete, smart goal, right? Time sensitive, accurate, attainable, measurable goals. So you need to parse that out. If you're going to buy a house, when are you going to have that house? Is it 2.5 years? Perfect. Then we know the goal and we know now what to invest in. But in
Yeah.
order to even know whether or not you're going to have the down payment for your property in 2.5 years or 2 years, whatever it is, you first need to know what your month to month cash flow is. You need to have a budget in place to be able to tell you, hey, I have exactly $2,000 coming in on a month to month basis. I know that I'm going to need $50,000 for a down payment, which means easy math, right? 50,000 divided by $2,000 a month. That gives us roughly 24 months, roughly 2 years. It's actually
Mhm.
25 months, but I digress. Case in point, now we know we have a time horizon of 2 years, which
Yeah.
means now I'm going to only invest in something that can guarantee me a return without any risk of loss over the next 2 years. So it's so important to start your financial goals with budgeting. And again, not many people do that. So I like to stress that a lot with people that I meet. It is so fundamental to start first with a budget to do anything with your personal finances.
No, this is huge because everybody just, a lot of my friends, even, if you talk about budgeting, I would say out of the 10 friends that I could think of off the top of my head, maybe one, and maybe one does that. Everybody else is like, oh, I'll just put into my savings. I'll buy a house when I can get a house, or, I'm gonna wait till my stocks go up or things like that. But nobody really budgets at all. This
Not
is
no,
huge.
it's incredible. It and kind of to your point there, a lot of what we do as a firm is we manage people's wealth. And when we're doing our calculations to create financial plans for people, obviously we focus on income and expenses. We try and parse out whatever the cash flow is, because that cash flow, that money that's left over after you pay all your expenses on a month to month basis, that's the money that actually goes towards your goals. It's not your income. It's the money. It's not what you earn. It's what you keep. So part of these conversations, as you can imagine, then is we ask people, okay, what are your assets? What are your debts? What's your income? And everybody knows their income to a T. Like there are people who will get down to the very penny.
Mhm.
But then you ask them, what are your expenses? I have yet to find a single person who knows exactly what their month-to-month expenses are.
Yeah.
It's incredible.
It's incredible. Yeah. It's, I actually had this conversation a while ago with one of my friends, and I was talking to him like, "Hey man, like, how do you spend so much money? Like, what do you spend money on?" I was like, "I don't know. I go here, I go there. Maybe I do this, I do that." And I say, "But like, do you know your actual expenses? Because you want to buy a house. Like, how can we work this out for you?" He says, "I don't know. People don't really know it."
Which is such a bummer for folks in our industry, right? Where it's like we're trying to help people, but then people don't even really know where to start because they don't have even just kind of like a nucleus of a number to build all the other questions that need to be answered. Like similar to when we're setting goals for folks, right? Well,
Mhm.
if you just say, I'm going to go to the gym, what's going to happen? Well, chances are you're probably never going to go to the gym.
Yeah.
But if you tell yourself, hey, I'm going to go to the gym 3 days a week and I'm going to do this until I lose 15 pounds, what do you
Hmm.
think's going to happen? Chances are you're probably going to show up at least once, which is
Yeah.
infinitely better than never showing up at all.
Exactly.
But in order to like answer those questions of, okay, how frequently am I going to do this? What's my stopping point? What's the light at the end of the tunnel? You need to first know that first little answer, which is, in that context, it's, what do I really want? What is my goal? What is it? 15 pounds? Is it 20 pounds? Whatever. And then I can figure out, okay, well, if I do this how quickly do I want this? Do I want this in a month? Do I want this in 2 months? Okay, I want it in 1 month. All right, if I want it in 1 month and I'm trying to figure out how much poundage I'm losing on a day-to-day basis, I don't know if that's even possible. Certainly is with money, but maybe this isn't the greatest example.
Yeah.
But case in point, then you say, okay, if I'm losing, a half a pound every time I work out, trying to lose 15 pounds in a month, then basically I need to show up 30 out of 30 days to the gym, which might seem daunting, but that's the reality, right? And if you can parse that out, then you immediately know too that that goal might not work out. It might not be realistic. So then
Hmm.
you can say, okay, well, that wasn't a good goal. How about I do 2 months? So now I'm doing pretty much every other day at the gym for the next two
Yeah.
months. That's something I could do. But you need to start first with what is that cash flow when it comes to the money goals, right? What is the cash flow? Because once you know how much you have to afford, you can say, okay, I want a property and I can afford $3,000 a month for, my mortgage payment, principal, interest, taxes, and insurance. I can afford $3,000. That will then give me the total down or the total value of the house that I'm able to afford on a month-to-month basis, which
Hmm.
then solves the big question, which is what's the down payment I need? Because you can easily calculate 3, 10, or 20% off of whatever that big mortgage number is. So it's such a foundational, you need that. You really
Yeah.
need that. So I encourage folks to do it really to also help you and me out in our industries because we want to help people. We want to see people succeed. We want to give people houses, families, whatever their heart desires. But help us help you.
That's a good point. And throughout your conversation, I thought of an idea. Maybe you can say this is correct or not correct, but when you brought up the gym thing and going to the gym, all that stuff, I would say you are in your industry for people with money is a personal trainer who designs meal plans, what to work out, what to do at the gym, when to come to the gym. You are the personal trainer for financial wellness. Is that correct? Or is that not a
I,
good?
I hate and love that comparison at the same time. I love it because it's so true.
Yeah.
I just don't like it because people already hate going to the gym. So like I'm like, all right, not only am I gonna make you think about your finances, which I'm sure you roll your eyes at every time, but I'm also gonna get your money fit. Um, but it's so true. I really am.
Yeah,
I'm making action plans for people. I'm encouraging them through example. Um, so yeah, I'm the fitness trainer of personal finance.
that's fantastic. I guess we'll jump into the next idea now. And since we're talking about personal finance, people always think about the end goal and they think about retirement. So, what do you define retirement as?
Great question. Yeah, so again, another one of those kind of like paradigm shifting answers. And maybe it just offers more clarity than anything else, because when we think about retirement,
Hmm.
it's kind of this very loose concept, right? And admittedly, that's fair, because my retirement's going to look very drastically different than yours. Um, I may want a cabin in the woods. You may want to travel the world. Somebody else may just want to have a beach house, whatever retirement looks like. Some people don't even want to leave the workforce. They just like their job. They want to work it till the day they drop. And, that's fine, right? If that's what you like, then, mazel tov. So the the question of what is retirement is tough to answer, but it does have a common trait amongst every individual,
Okay.
which is that retirement, in all fairness, is just financial independence. And to unpack that term a little bit, all financial independence is being able to produce enough income to pay for your expenses without having to work to receive that income. That is financial independence. And so, with that understanding, right, it becomes so much more clear what retirement is, right? Because, you know, where the expenses come from, whether it's me having a cabin in the woods or you traveling the world, doesn't matter. But as long as my income can support my lifestyle and your income can support your lifestyle without either one of us having to work, then that's retirement. It's very simple. So really, when we're, talking about how do you attain retirement, I encourage folks to think a little bit more outside the box, because we're kind of spoon fed the concept of 401ks and IRAs and put money into a Roth account and all these things. And by golly, they are great accounts. They are tax havens that, all else being equal, will build your wealth faster than any other account. However, that's not the only way to create financial independence. You
Okay.
can have a portfolio of real estate properties that provide you rental income. You can be a business owner and be what's called an absentee owner, where the business runs itself so well that you don't actually have to show up on a day-to-day basis to make sure that's still profitable. Um, and so on and so forth, right? So there are many, many, many different ways that you can attain retirement through financial independence once you understand that that's all retirement is. If you can make your income match your expenses without having to work for a paycheck, you have attained retirement, and you can do that at any point in your life.
Wow. That's heavy. It's a lot.
Coming with some heavy knowledge, Javi.
So that's heavy, man. Oh, man. I guess at this point, since we're getting towards the end of this meeting and this video for you guys, I guess I want to leave you with this question. How can people become more involved with their own financial literacy at this point?
Absolutely. Well, so like I mentioned, certainly start first with a budget. If you're not using any types of budgeting apps, certainly, like, this is your call to action to download a budgeting app. Me
What would you
personally,
recommend for
I,
budgeting?
I was about to say, I personally use Rocket Money. It's
Okay.
I have no affiliation. I don't even have a referral code, although I wish. I have asked them about it based on how much I have referenced them. But they are very, very good at helping people take all the clutter of all their different accounts with all these different providers and putting it into one spot, so you just have a radar on where your inflows and outflows are going, which ultimately is all you need for a budget. And certainly, if you want to lower your spending, that's only going to help you accomplish your financial goals further. But setting up a budget isn't necessarily living poor. It's just knowing exactly what is going in and going out on a month to month basis. So I would recommend using tools like that for your personal finances. And then for anybody who might be listening, who might be working in HR or as a business owner or anything like that, I cannot stress enough how wonderful financial wellness has seen returns on investment for employers through my work. It is very low cost. It is surprisingly low in cost, especially when you compare it to the match contributions you may have to contribute towards your existing 401k plan or your health insurance benefits or your life insurance, all
Mhm.
those group benefit plans. It comes in at a staggeringly low number relative to those. And yet, as you can kind of parse out from this conversation, the pursuit of financial literacy and the financial wellness that comes from that in turn creates not only a happier workforce, but a workforce that knows how to do more with their pay so that you aren't being bogged down with annual increases year after year after year. And people, we actually worked with an employer once, or still to this day, but
Yeah.
we work with an employer where their staff was just so kind of in the dumps that they were giving out personal loans to their employees, like $5,000 a pop every single month. So the person would take the money out, do what they need to, pay rent, whatever, and then pay it back. And then the very next day, they'd pull out another $5,000 loan over and over
Really?
again. And then that company brought us on for our financial wellness program. And to this day, we have seen a drastic decrease in the amount of people who take those loans, all the way to the point where there's just one last person who still does this. And I think it's mostly because he's been avoiding all of our meetings and our webinars, but we'll get to him. We'll get to him.
Okay.
But case in point, that's if you're an employer and you're looking to provide this wonderful benefit for your employees so that you can see your employees succeed and be happy and do all the things that they want to do with the income that they're receiving, get in contact with me because I'd be happy to run through what we can provide.
Awesome. With that being said, guys, if you guys want to get in contact with Jordan, if you guys want to reach out to him, see about his services, if you're an employer that wants to jump on and say, hey, I want you guys to represent us, I'm going to leave all his information below. You can email him, all that fun stuff, and set up a time actually to chat with him yourselves. So, with that being said, Jordan, it was great to have you on the show. Thank you so much for jumping on, man. Not only are you a really good video game player, but you're actually an amazing person. And I'm glad to have met you and for people to see what you provide. All right.
Thanks, Javi. I'll have to deflate my head after after this meeting with all those kind words. But thanks for having me. You're likewise a great professional, and you're doing a lot of great work with these videos. And I'm happy for the folks who are watching right now to see you here, and we'll see you in the next one.
All right, guys. See you soon. Bye.